Good afternoon, traders. It is Thursday, March 5th, 2020, and the U.S. stock market is closed. Hey, we had another crazy day today. The Dow, after gaining over 1,100 points yesterday, it dropped 970 points today. Erasing most of those gains from yesterday. I let me just begin my brief discussion on this phenomena with headlines that I read. I go on a CNN site, not their TV station, but they have a pre-market and post-market site that has good quotes. That's how I check to see how stock futures are doing before the market opens every morning, and also in the aftermarket. So that's why I'm on that site. But CNN always has a headline and a little story to go along with this, and I find this a little amusing sometimes, the headlines they come up with. And yesterday, when stocks gained almost 1,200 points, their headline was that stocks rally on Joe Biden's great Super Tuesday performance. In other words, because Joe Biden did well in the primaries, stocks rallied almost a record-setting day. But then, of course, today it erases almost all that, falling 970 points. So what are they going to write for a headline now? Joe Biden's still around. Nothing's changed. So they write this headline, Dow tumbles nearly 1,000 points again because stocks can't figure out coronavirus. And of course, the real problem here is CNN can't figure out the stock market. And I'm not disparaging CNN. Nobody can figure out the stock market. The stock market usually is very irrational in its movement. I wrote some manuals almost 25 years ago, and in those manuals I proposed an explanation for stock market movement, and I called it Robert's Rule of the Screw. And my idea, as far as what really drives all market prices, is markets are driven in the direction that is going to screw the maximum number of investors. And I'm being facetious about this, but there's a lot of truth to it. This is why contrarian ideas work in trading. You can't jump on something and do what everybody else is doing and expect to make money. The people that make money in stocks or futures or any markets do so by taking a position that is contrary to the majority of investors. And so, and to take this just a little bit further, I am just as much a crowd follower as anybody else. I tend to think like the majority of people, but I have learned that it's not good for me to invest like I think. And that's why I designed an algorithm that does the thinking for me. And one of the things you hear me say all the time is, we buy the gaps. Now, what this means is a mark of a stock, anything gaps up, we buy it. And we buy it because that is written into the algorithm, which I wrote. But that is that's contrarian thinking. When a market gaps up, most people want to sell it. They think it's overbought, it's too high, and they want to sell it rather than buy it. But our algorithm has contrarian thinking built into it, and we buy. And if you go back and look at some of these spectacular trades that we've had in the last 6 weeks, you will find every one of those started with a big gap up. And we obviously made a lot of money on it. I'm just telling you, um, the stock market may appear irrational, but it's really not. It's doing what screws the maximum number of investors. And so if you go with the crowd, you're going to lose money. But if you can trade contrarian, you can make some money. And that's what we try to do with our algorithm. Okay. So how did today go? Well, we we kind of got screwed on the open. We had I don't know, what did we have? $4,000, $5,000, something like that yesterday on the close positive, and the Dow opens down very strong, 600 points or something on the open, and all those positive trades go negative, and we ended up closing out $4,400 negative on our closed out trades. But then we started getting into new stuff. We got into 10 new positions, 4 positive, 6 are negative, but we're holding positive about $5,500. So we actually have a larger positive open trade number than what we closed out on the negative side. So uh, technically, we did make some money. And by the way, I'm not sure just what happened. Like within 15 minutes before the close, that number wasn't $5,500. It was like 1,200 or $12,000, and we kind of saw $6,000 evaporate that last 15 minutes. So I'm not sure just what happened there. We'll just have to wait till tomorrow. As I say, it's a crazy, volatile, unbelievably volatile market, and we just follow the algorithm, but we're way on top of things so far. I'll show you 3 stocks here that were pretty good. This first one is TDOC, TDOC, that's Teladoc. It's a company that offers consultation with a doctor on a phone. You can see why that might be doing pretty good right now. If people are afraid of the coronavirus, they're not going to want to go out and go to a doctor's office. They prefer talking on a phone. So this company is up. We bought it right away on the open this morning, and it took off, and we're holding $2,500 there in Teladoc. And then, quite predictably, and I gotta maneuver this just a little to show you this, our short positions that we take on a declining market, that's in TVIX and UVXY. They both did really good. This is TVIX. Again, gap up. We buy the gaps. It kept going. We got $4,400 there in TVIX. And this is UVXY. Again, just like TVIX, gapped up. We buy the gaps. and it kept going. A little more sell off there than I liked if it closed, but we're still up $4,300 in UVXY. So good trades there. If the thing continues down, we'll make money. If it goes back up, and it could, we won't make as much money. We'll just have to wait and see. Trader Bob signing off. See you tomorrow on my favorite day, Friday.